Good morning. Welcome everybody to the ongoing series put on the air by the Capital Group and Hertzbach Accounting. Thank you for joining us today. In this ongoing series, we're going to continue to discuss the PPP program and the loans that are out there right now and how to turn your loan from a program of receiving it from a loan to a grant. With me today, we have our expert panel. Andrew Beardall, who is in-house counsel for the Capital Group, an attorney, and as well as an advisor. And in addition, on the Hertzbach side, we have Zeynep, Orhan, and Erica Price, accountants at Hertzbach Accounting Firm in Bethesda, Maryland. Welcome, everybody, and we will start the program now. Do not worry. Please feel free to have questions brought in through our YouTube page. We will be looking at the program here through our YouTube channel. So if you have a question, feel free to put it in the comments. We'll try to address them along the way. If we don't address the comments during the show, we will be sure to get back with you personally so that you will have all your questions answered. Thank you, and let's start the program. Andrew.
Good morning, everyone. Thank you, Joe. So we're here to talk about the Payroll Protection Plan. Payroll Protection Plan is a program that was authorized by the CARES Act, signed into law by the president earlier this spring. And what it provided for were loans to small businesses. And those loans, when spent on charges that the government built up as part of the program, could then become forgivable. In essence, it would become a grant from the government. The goal of this program was to provide security for employees to know that they were still getting a paycheck. And in the early days of the pandemic, that was something that a lot of people were really scared about because there were layoffs happening left and right. And rather than go on unemployment, the goal was to keep them employed, even if they weren't going to be working. The goal was to keep them employed and keep those paychecks coming in. And this would help protect small businesses and provide a little bit of extra for overhead. So let's dig into some of the details here. Now, originally, the PPP program was for businesses that were in business as of the 15th of February of this year. That is still the case. You have to have 500 or less employees, so things are a little bit different if you remember the hospitality industry. Should you be part of the hospitality industry, please reach out to us and talk to you about that individually because it's way too, granular to get into here. Now, you had to have applied for the PPP program weeks ago. Oh, and then it changed to days ago in the next act. And then just last week, it changed to August 8th. So for everyone who has not yet applied for a PPP loan, the availability for that still exists all the way through to August 8th. And there's still $120 some odd billion left in the program that are available to be loaned. Now, the SBA has streamlined the loan process. So for anybody who's gone through an SBA loan, it's a chainsaw because there are so many different aspects of it that you have to do to qualify. But now for this program, it's streamlined. You don't have to worry about the credit elsewhere test. You don't have to put up a personal guarantee or collateral. It just makes it a lot quicker and a lot less painful as far as the application process goes. Because again, the goal was to get money into companies' hands and for the company to get that money into employees' hands. So let's talk about that money. What can you spend it on? Well, you can spend it on whatever you want. But if you want it to be forgiven, there are only certain things that you can spend it on. And those are payroll, employee benefits, rent, utilities, and mortgage interest. Now, what will happen is originally, you had 8 weeks to spend that money in those various categories. Under a more recent act called the PPP-FA, the Payroll Protection Plan Flexibility Act, that stretched that out from 8 to 24 weeks. So you now have up to 24 weeks to spend all that money in those prescribed categories. Once you've done that, you can then apply for forgiveness. But there are a couple of restrictions on these to have it mature into a forgivable instrument. And that is, don't fire people. Don't cut people's wages. Don't cut people's hours. Again, even if they're not working, the goal is to keep their salaries up. Because when you think about it, all the bars, restaurants, nightclubs, miniature golf courses, bowling alleys, all those sorts of things, they couldn't possibly have people work. But if they got PPP loans, they would be paying people based on their normal shifts. So, and if you have fired a bunch of people, hire them back. Because my friends from Hertzbach are going to talk about that in much greater detail. But there are tests for that are going to be done for forgiveness. And if you are out of compliance with that, then you run the risk of some or all of your loan not being forgivable. So let's talk about what is payroll. Because payroll means a lot of different things. But let's start with what everyone knows it means, your gross payroll, right? The amount that you pay your employees. On top of that, you're going to have things like employee benefits, things such as retirement contributions or insurance payments, medical insurance, STD, LTD. You know, the employer paid side of that, those all become forgivable. Matching for 401ks become forgivable. Now, there is a limit though, and that limit is up to $100,000 per employee on their payroll. If you have an employee who's making over $100,000 a year, they're capped, which means if you're on the 8-week plan, only $15,385 worth of forgivable expenses can be attributed to that employee. If you're on the 24-week plan, that number goes up to $46,000 and change. But if you have somebody who's making $200,000, $300,000, $400,000, you cannot account for all of that in forgiveness, only the portion up to $100,000. In the case of things like one-time contributions, a one-time HSA contribution, a one-time safe harbor contribution to a 401k plan, talk to your accountants, talk to your advisors about that, because there are certain hoops that have to be jumped through, and some or all of that may not be forgivable if you don't do it right. Our friends at Hertzbach are excellent at that. They'll be able to talk you through the whole thing, but definitely talk to someone who knows that better, because it's very important. You want to maximize your forgivability. Now, the other side of this is overhead costs. You know, what type of overhead can be forgiven? First is rent, okay? Rent is exactly what you think it is. Rent on your office, something that you get an invoice for every month from your landlord. But it can also be rent when you have the case of a leasing agreement on a piece of equipment or something along that line. Next one is mortgage. Well, you can't write off the whole mortgage because that would be swell, wouldn't it? But what can be forgiven is the interest on that mortgage. Take a look at your mortgage statement, the line that says interest, and whatever amount is next to that becomes a forgivable amount. Thirdly, utilities, right? What are utilities? Well, it's gas, electric, water, internet, telephone. Right? It does not include technology services, right? So if you have an Office 365 account, like I do, not forgivable. But cloud services, not forgivable. But base utilities are considered forgivable under this plan. And in some cases, transportation costs can be figured into that as well. Again, talk to your advisors about that, because there is a more detailed analysis that's required. So just to summarize, you can still apply. If you haven't, do it. This is a marvelous program. Talk to your bank, find a community bank. If the big banks won't help you, apply for it and get this funding, because it's there for you if you are taking an economic hit. And let's face it, a lot of companies are these days. What's not allowed? Well, payroll over $100,000, not allowed. Mortgage principal, not allowed. Employer paid taxes on Social Security and Medicare, you know how you have to match the amount contributed by the employee? Yeah, those aren't allowed. Those are not a forgivable expense. And things like tech services. So that's all about what the program is. So now I'm going to pass the buck over to my friends from Hertzbach, and they're going to tell you how to get it forgiven. So let's pass it over to Zeynep here. Zeynep, thank you very much. I will let you take it from here.
Andrew, thank you very much. Good morning, everyone. As Joe mentioned, this is the ongoing series of our webinars talking about the PPP program and the forgiveness of the loans. The reason being, as with everything that is new and evolving, there has been many changes to the Paycheck Protection Program, some of which was just clarified guidance. And about a month ago, on June 5th, there was the Paycheck Protection Program Flexibility Act of 2020 was signed. So my colleague Erica Price and I will talk about these updates and inform you about the current changes. The information that we're presenting today is based on what's out there right now. So it is still subject to change as new guidance becomes available. So that is our disclaimer right there. So I will start over with the giving you the basics of what has changed with the Flexibility Act of 2020. So the previous, the maturity for the previous loans were 2 years. Any new loan made after June 5th, the maturity has been automatically extended to 5 years now. The 8-week option still remains for the existing loans, but the loan forgiveness covered period has been extended. So it's now the earlier of 24 weeks after the organization receives the funds, or December 31st, 2020, the year end. The previous payroll cost requirement of 75% has now been reduced to 60%, which allows for other expenses to be qualified as forgivable. So there has been many organizations that had reductions in their FTEs or any salary wage reductions. The safe harbor for these organizations that had reductions in their FTEs or any salary wage reductions during the period from February 15th through April 26th has now been extended through the end of the year. If we could move on to the next slide, please. There are many organizations that were unable to slide 12, please. I think I passed one, sorry. Thank you. So there has been many organizations that were unable to assume prior level of operations due to the regulations imposed through through COVID. For such organizations, additional safe harbor has been established to help out with these full-time employee reduction calculations. And in addition to that, the existing FTE reduction exception has been modified, which my colleague Erica will talk a little bit in more detail. Organizations have now the ability to wait for 10 months after the end of their covered period to submit their forgiveness applications. And they don't have to make any loan payments through those 10 months. One other flexibility is regarding the employer payroll taxes. The payment of these taxes can be delayed if you obtain forgiveness. So we mentioned the changes to the rules have been very frequent. Just last week on July 4th, the Paycheck Protection Program Extension Act was signed, and this extended the deadline to have the loans approved to August the 8th, as Andrew had mentioned. So starting yesterday, on July 6th, SBA started reaccepting the applications. And as of the end of the month, June, according to SBA, there were over 130 billion in funds remaining. Now let's move on to the forgiveness application and what has changed about the application itself. Now there is this new form, the easy form. It is a simplified application and can only be used by organizations that fall under one of the three criteria that you will see on the slide. The first one is that they don't have any employees. Other criteria that may allow your organization to qualify for this easy form is about the reductions. If the organization did not reduce salaries or FTEs by certain levels, they may still be eligible to qualify for this new simplified application, the easy form. Currently, there has been some inconsistencies over the forms and the expiration date on both of these forms. The long form for the forgiveness application and the easy form, they have expiration dates on the forms as October 31st. This is inconsistent with the 10-month rule. So with so many other things that has been changing and additional guidance has been given, there will probably be some more changes in the pipeline for the application forms as well. As for where these application forms should be filed on slide 15, the organizations should complete the applications and submit to the lenders. The timing of these applications is probably best to submit as soon as you're able and soon after your covered period ends. But here are the rules. You may submit at any time, at the maturity of the loan or even before. If the 10 months has passed since the end of your covered period, however, the loan payments must begin. So if you wait and not submit your forgiveness application after the 10 months, you still need to start paying your loan repayments. I mentioned the possibility of filing these applications early, before your covered period ends. So if your organization decides to apply for forgiveness prior to the end of your covered period, all of the funds that you're requesting forgiveness for must already be spent. We'll get to it momentarily, but there's a lot of supporting documentation that most of it is required to be submitted, and some you just need to make sure you have that. And while you're submitting this early application, you should also complete your supporting documentation and attach it to your application. This includes one example actually for this is the Form 941 for your payroll tax filing. This should be filed and attached to your application. If your organization had wage reductions and they're expecting to remedy them or to utilize the safe harbor rule, I think it's probably best that you wait and do not proceed with the early application for the forgiveness. I'll briefly walk you through the parts of these two applications. I'll start with the first one, the long form. First of all, both of these forms have their separate instructions. The easy form is shorter, but the instructions are just as long. Talking about the long form, the 3508, there are 4 parts to it. The forgiveness calculation form, Schedule A worksheet for the Schedule A, and the demographic information about the organization. The easy form does not include the 2 parts, the Schedule A and the worksheet for Schedule A. The forgiveness calculation on the easy form is also shorter because it excludes the reduction calculations, as that is one of the criterion that allows you to file the easy form. But because there's limited information presented on the easy form, there are additional representations that borrowers will need to sign off on. I previously alluded to it, the supporting documentation that needs to be filed with your application. The borrowers, the organizations must submit certain supporting documentation, and some of them have to be maintained for a period of time, which is 6 years, even though the submission is not necessarily a requirement. So the supporting documentation is just as important as the application itself, because unless you file the required supporting documentation, your forgiveness might not be granted and your application may be incomplete. I will turn it over to my colleague, Erica Price, who will give more detailed information about the lender and the SBA involvement and a little bit more detail about the forgiveness program.
Hi, Zeynep. Thank you so much. I know we're really excited to be here. So I'm going to talk a little bit about the lender and SBA involvement. This and disclaimer, the SBA has promised to issue additional guidance on loans that they choose to review. So this information does not address loans that will be reviewed by the SBA. After submitting the loan forgiveness application to your lender will have 60 days to issue their decision to the SBA. At the same time, your lender also needs to request payment from the SBA. Lender decisions regarding forgiveness can be one of 3 options: approval in whole or in part, denial, or denial without prejudice. And this third option would be due to a pending review by the SBA. After the SBA gets the lender, the bank decision, they will have 90 days to respond. If they agree, they will remit the appropriate forgiveness amount, which would include accrued interest, to the lender. Next slide. Now we can talk a little bit about the SBA review of individual loan files. So the SBA will review all loans in excess of 2 million. So I'll say that again. If the loan is over 2 million, it's going to be reviewed. The SBA can also choose to review any other loan that they want. If the SBA does undertake a review, they will actually notify the lender first, not the borrower. The lender is then responsible for notifying the borrower and sending required loan documentation to the SBA. And if your loan is selected for review, no forgiveness decision can be given until the SBA review is complete. So the SBA reviews will focus on three main areas. Borrower eligibility. So this is basically asking, is the borrower eligible for the program? Do they have employees that live in the United States? Are they below the required employee threshold? The second would be loan amounts and use of proceeds. So did the borrower receive the proper loan amount? Did the borrower spend their proceeds appropriately? And the final focus of review would be based on loan forgiveness. So this is just asking, is the borrower's forgiveness amount accurate? We can go to the next slide, which discusses what happens if it's not forgiven. So there's kind of two reasons that there are scenarios in which it would be determined not forgiven. So the first reason would be that the lender does not approve the forgiveness application. In this case, the lender must provide the SBA with the reason for denial and notify the borrower that the application was denied. In this case, the borrower can actually request that the SBA review the lender's decision. The SBA doesn't have to review the lender's decision, but it's something that the borrower can do if this were to happen. The second reason would be that the SBA finds the borrower ineligible in some respect. So in this case, the SBA will direct the lender to deny loan forgiveness in whole or in part, depending on what the SBA has determined. And then the SBA may seek repayment for the outstanding PPP loan balance. Borrowers, so if they're part of this scenario, borrowers can appeal the SBA's decision, but the SBA has not issued guidance on the appeals process at this time. And then just a reminder that any unforgiven portion of the PPP loan remains a loan. So moving on, we can discuss some possible issues with loan forgiveness. So what if you don't satisfy the payroll costs 60% requirement? So this is the requirement that says at least 60% of your forgiveness amount. And as Zeynep mentioned previously, it used to be 75, it was now reduced to 60. At least 60% of your forgiveness amount needs to be spent on payroll costs. So the good news is, if you don't meet this 60% threshold, partial forgiveness should still be obtained, barring no other reductions or issues. So in this case, the forgiveness amount is merely lowered so that the 60% threshold is met. So they take your forgiveness amount prior to reduction, divide by 0.6, you get your adjusted forgiveness amount. Another concern would be, what if payroll decreased during the covered period? I would want to know why did it decrease? What happened? And remember that reductions in employees, hours, and wages can all result in reduced forgiveness amounts. And then, so these last two kind of sections on this slide discuss the two reductions that are that your loan forgiveness amount is basically subject to. So the first is the full-time equivalent FTE reduction quotient. This is the most significant reduction. It is based on a percentage of FTEs during the covered period as compared to FTEs during the business's chosen reference period. So there's a 2019 reference period, a 2020 reference period, and even a third option for seasonal employers. the resulting percentage is multiplied by your initial forgiveness amount. And that is how much the forgiveness is adjusted. So you can see how it could result in a significant reduction. The second reduction that loans can be subject to is the salary hourly wage reduction. This reduction, it's important to remember, it's based solely on the rate of pay. So if the wage that an employee is paid during the covered period is at least 75% of what it was during Q1 2020, there is no reduction. And this calculation is done on an employee by employee basis. This is not done based on the company as a whole. So what should you consider when making decisions that could affect your PPP forgiveness? You're going to want to rehire or laid off furloughed employees as soon as possible. The SBA has made it very clear that you can pay employees even though they are not working. It's really the spirit of the program. You also want to restore reduced hours as soon as you can. And wages, again, even if people aren't working, the spirit of the program is to keep them paid. And then lastly, you want to consider the available exceptions and safe harbors. In particular, there's a level of business, kind of what I'm calling it, safe harbor for the FTE reduction. And this could be a significant safe harbor for a lot of businesses. And we will discuss that shortly. And finally, on that note, we just want to make sure that if your business is claiming a safe harbor or an exception, they need to be well documented. Okay, so we can go to the next slide. Perfect. So the two reductions that I originally mentioned, the FTE reduction has several exceptions and a couple safe harbors. So we can kind of talk through these. A borrower can be exempt from an FTE reduction by satisfying one of the below exceptions or claiming a safe harbor. The exceptions listed on the slide, 1 through 3, relate to laid off employees who refuse to return to work, laid off or employees that have reduced schedules and then refuse to go back to their prior schedule, employees who were fired for cause, and employees who voluntarily resigned or voluntarily requested a reduction in hours. These exceptions are an employee by employee exception, basically, and in those cases, they would not result in hurting your FTE. Going down to the safe harbors, there are two for the FTE reductions. The first one that I'm going to discuss is the newer one. It eliminates the FTE reduction for borrowers who can document that they are unable to maintain the same level of business as they did prior to February 15th of this year. And the reason that they can't do that has to be because, and it can be direct or indirect, but because of COVID-19 safety regulations or guidance. This safe harbor requires, has specific set of instructions that can be found on the SBA form instructions. Companies claiming the safe harbor need to make sure that they read those instructions so that it's documented appropriately. And the second safe harbor is kind of more of a narrow scope. It's only for employers that reduced their FTE level between February 15th and April 26th of this year. And they have up until the end of the year to restore their FTE count. If we continue on, we can discuss, there's a one safe harbor for the hourly wage reduction. It's very similar to the one we just discussed. Again, it's only for employers that had wage reductions during February 15th through April 26th. And they have up until the end of the year to restore those wages. So what if you're going to consider taking one of these safe harbors or one of these exceptions? What you really want to consider and ensure that you're still meeting is the payroll cost 60% requirement. Regardless of whatever exceptions or safe harbors are claimed, the 60% requirement needs to be met. The good news is that if the borrowers are choosing the 24-week period, they should have enough time to meet the 60% requirement, even if they utilize the exceptions or the safe harbors. So our next slide talks a little bit about how you tell if a cost is eligible based on timing. So paid versus incurred. A lot of people want to equate this to cash versus accrual. And my advice is don't do that. The SBA never uses the terms cash or accrual, and you'll see it doesn't really fit. So for example, non-payroll costs must either be paid during the covered period or incurred during the covered period and paid on or before the next regular billing date. Items paid after the covered period would be prorated such that only the costs incurred during the covered period would be eligible for forgiveness. So your electricity bill for July is paid in August and the end of your covered period is July 31st. Whatever your whole bill for July, say it's for the whole month, even if it's paid in August, would be covered as a covered utility. Let's say your billing period actually goes from July 15th to August 15th. In that case, only half of that bill is eligible for forgiveness. And moving down to payroll costs. So payroll costs must be incurred or paid. For payroll, pretty kind of simple here, incurred on the day that the employee's pay is earned. And the SBA has said if you're paying employees that aren't working, it would be incurred on the day the employee would have worked. So if your employee normally works Monday, Wednesday, Friday, even if they're not working, you would incur the payroll Monday, Wednesday, Friday. And then it is paid on the day the paycheck is dispersed. So payroll costs incurred during, so it can be paid or incurred. And then kind of the caveat is that payroll costs incurred during the borrower's last pay period of the covered period are eligible for forgiveness as long as they're paid before the next regular pay date. And I think this brings us to our last slide. We're just going to talk a little bit about the borrower's good faith certification. So in order to be eligible for the Paycheck Protection Program, the borrower had to certify that current economic conditions made the loan request necessary to support ongoing operations. So that kind of certification and guidance released later by the SBA created a lot of concern for a lot of borrowers. I guess in response to that concern, the SBA created a safe harbor whereby borrowers who, when considered together with their affiliates, have loan proceeds of less than $2 million will be deemed to have made the required certification in good faith. So how I'm interpreting that is that borrowers that are under this $2 million threshold don't have to worry about SBA reviews for eligibility for the program. So this is great news for a lot of the smaller borrowers. And then kind of just discussing to tie back to the SBA review that we talked about a little bit earlier. The threshold for loans that SBA will 100% review is also $2 million. At this point, it is unclear whether the $2 million threshold for SBA loan review is for individual loans or if it's for loans considered together in affiliated group. The loan forgiveness application does have a box that borrowers are required to check if they receive, together with their affiliates, loans in excess of $2 million. And that is all we have. Joe, do we have any questions?
Thank you, panel. That was very good. Appreciate your input on this. We did have some viewers send in questions during the broadcast, so I have them here. I'd like to start to answer some of those. First question we had come in was, what happens if we terminate an employee for cause and not due to financial hardship? How do we treat that? That's a little bit of a dark question, so I'll send that one right to the lawyer, Andrew.
Okay. Well, that will not count against you if you properly document it. As Erica went through, there are certain exceptions that will not adversely affect a company. And terminating someone for cause is one of those exceptions. Now, originally, that wasn't there, but that's come out in further guidance, and that's helped out a lot of people. Because, yeah, if you have somebody who's stealing from you or setting fire to the office or whatever, and you want to get rid of them, perfectly appropriate to get rid of them, and you're not going to be punished for that. However, as Erica said, document, document, document. You want to make sure it's nice and clear why you fired them. Do you want to have that as part of their employee record? If they did set fire to the office, have the police report. But that's what you need to have in place so that employee won't count against you.
Great, thank you. We had another question come in. Will each bank have its own version of the loan forgiveness form, or will that vary? We'll send that one over to Zeynep.
Thank you, Joe. Each lender's application process may be slightly different. As for the application forms, the standard application forms are the ones that we already spoke about, but the documentation needed might vary. Erica, if you have more insight to it, would you mind sharing?
Yeah, of course. So lenders are, the SBA did explicitly say that lenders are allowed to use lender equivalent forms. And probably what I think we'll see, especially with the larger banks, is they'll probably create like an online portal where the form will be electronic. People can submit the supporting documentation electronically, and it'll all be online, which would be great. So short answer, yes, lenders can have their own forms, but it should be quote unquote an equivalent form.
And how can businesses tell if their loan has a 5-year or a 2-year maturity, Erica?
So that's a good question. So if the SBA assigned the loan number on June 5th or later, it will automatically have a 5-year maturity. If the loan was assigned an SBA loan number before June 5th, it has the 2-year maturity unless the lender and the borrower mutually agree to change it. So it's important to know or not have the expectation that if you had a loan prior to June 5th, you're not going to get the automatic 5-year maturity. You need to talk with your borrower to see if you can get that changed. Andrew?
Yeah, and just to add into that, while the 2-year versus 5-year maturity piece is important, remember the goal here is for you to get it all forgiven. All right. If you follow some of the direction that we've given you and you work with your advisors, your tax folks, and your accountants, this 2-year versus 5-year will make no difference at all because you want to get this forgiven. If it does look like it's not going to be forgiven and you want to take the longer period, then by all means, check with your bank if you have one that was prior to June 5th and say, hey, we'd like the 5-year repayment. But as always, the goal here, get as much forgiven as possible so you have very little, if anything, to repay.
Definitely.
Great. Ryan wrote in, are there requirements for choosing the 24-week extension?
Should I jump in on that?
Oh, please, Erica, please. Thank you.
So it depends. Again, it's very similar to kind of what we talked about for the loan maturity. So it depends on when the SBA issued your loan number. And it's the June 5th date, and this is tying back to the PPP Flexibility Act, which is the date that was signed. So if your loan number was issued prior to June 5th, you can choose between the 24-week period or the 8-week period. If your loan number was assigned June 5th or later, you don't have the option to choose the 8-week period. However, the SBA has said that they're, as Zeynep said, allowed to apply for forgiveness prior to the end of the company's covered period. So there's not, I guess the change is not as drastic. So companies that had loans later are not forced to wait the whole 24 weeks, which is a very long time, even though they don't technically have the 8-week option.
And are there requirements for choosing the 24-week extension?
No, other than, no, basically anybody can the 24-week period. It's actually the 8-week period that you have a requirement for. Only the older loans can choose that.
And let me throw one other thing in on that too. Sorry to keep interrupting you there, Erica. But the 24 weeks for anybody who gets a new loan now, that cutoff is going to be December 31st. So it will be 24 weeks or December 31st, whichever comes first. So if you're one of the folks who waits until August 1st to get a loan, you will not have that full 24 weeks. You'll simply have 5 months, basically 20 weeks to get it done. So that's just something else to keep in mind, that December 31st, for the moment, is a hard deadline. Who knows what Congress may do next, but that is a hard stop for everything.
Yeah, that's definitely a good point. I think another good thing to mention is that most companies, because the loan amount is calculated off of 2.5 months, even if they get shorted a month and they only have 5 months, they should still be able to get complete forgiveness, even if they have that December 31st deadline.
Yeah, Erica, and that's a great point too. One of the things that could streamline people using this for forgiveness, now that you have 24 weeks, is to, forget about utilities and mortgage and all that. Just use it all for payroll. That way you are in line with the initial reason for this. And on top of it, it's just less paperwork for you at the end. You don't have to worry about finding that rent invoice from back in April or the mortgage statement from May when you're applying in October for forgiveness. If you put it all through payroll, you're going to need your 940s, 941s, payroll reports and the like, but it will streamline the process, and this extra time should be giving everybody the ability to do that.
Definitely.
And Andrew, we had a follow-up question come in from that. If we have 24 weeks, can I apply for a second loan?
No, that would be great, but everyone is capped at, you only have the one loan. It is based on take 2 months or eight weeks worth of payroll and add basically 250% of a normal month's payroll there. And that is how much of a loan you can get. And that's it. There's no provision to get a second one because wouldn't that be swell?
That would be nice. And the second part of that question was, if I don't have a loan, how much can I apply for?
All right, so take 4 weeks worth of payroll, multiply it by 250%, and that's what you're able to apply for. The payroll protection plan loan application that you can get through your banks actually walks you through that calculation with a great deal of detail, and in order to maximize what you can apply for. And in most cases, though not all, what you do is you look at your payroll, your average weekly payroll for the year 2019 and base it off of that. Now, there are other models that you can use, but that's the most common.
Thank you. We have another accounting question, so I'll throw this one over to Zeynep. What year do we take information from for documentation of our loan verification?
Joe, I think the question is about how long do we keep them? Or what? I couldn't understand the beginning of the question.
I'm sorry. What year are we taking numbers from for documentation of the loans in the loan forgiveness program? What accounting year are we using?
It's for the current period. Again, I'm slightly confused about the question. It's the expenses for your covered period. So it's not the past expenses or future expenses. It's the expenses incurred in your covered period.
Thank you. That's the answer. I think that's what we were looking for. Thank you. Great. Okay. And then a question that came in from Dora was, will this pay for workman's comp, unemployment, and pension costs? We'll throw that over to Erica.
So pension should fall under retirement benefits. And the SBA form 3508 will list kind of the specifics for the retirement contributions. Unemployment insurance, so employers' state and local taxes are allowed. And then what was the workers' comp is?
Yes, workman's comp, unemployment, and pension costs.
No for workers' comp.
Thank you. Okay. Andrew, did you have any follow-up on that as well from a legal perspective?
Well, just normal cost of doing business stuff, such as your commercial insurance, your general liability, your accounting costs. If you're paying folks like our good friends at Hertzbach, your insurance costs, if you're paying people like us for things like workers' comp, are not included. Those are not forgivable expenses. A lot of folks like to shovel everything in, hey, we just opened a new office and got some new furniture. Can that be forgivable? No, it can't. Can somebody who comes over to water our plants be forgivable? No, it can't. Those are very, very narrow categories because remember, the goal here was not just to provide a boost to business, even though it does. The real goal of it was to put money in employees' pockets. So pension plans, if they take the form of a 401k or a retirement contribution, then yeah, absolutely, they're included. Unemployment, that's a little stickier because if it's considered a tax, then yes. If it's considered an insurance payment, then no. And that varies from state to state. So make sure you double check that before you count that as something that you want forgivability on.
Great, thank you. And we only have a few minutes left here. So probably one of the other questions that we've been getting a lot offline is that, do you think there's going to be any future programs out there for businesses to apply for to get through the rest of the COVID, since it seems to be lasting a lot longer than the health officials first expected it to? And I'll throw that out to the entire panel. So how about Zeynep? You want to give us your thoughts on that?
Happy to. Currently, as both Andrew and I mentioned, there is a lot of money left in the program. We don't know how much of it will be applied for and loaned in the next month, or whether it will be extended again through the PPP program. So my take on it is, I guess they'll see how this month goes, how much of that appropriated money will be loaned for the future PPP loans, and it will be a decision made based on that. But as you said, it has been going way beyond what the initial estimation of the COVID impact would have been. So I'm pretty much sure we'll hear about more of these, but everything changes within a day's time, so we'll just wait and see.
Sure, thank you. Erica, your thoughts?
I can kind of speak to the PPP changes, which, as Zeynep mentioned, have been constant since the program rolled out. So I'm sure we'll see additional changes just for that program. And we might see additional programs come out as well. I think a lot of it will depend on how much funding is left after the new August 8th deadline.
Thank you. Andrew?
Well, what I think you're going to see is more targeted things as opposed to such a wide program. For example, one of the things that's being considered is right now, the PPP money that you get, you don't have to recognize as income on your taxes. But on the flip side, anything that you use it for, you don't get to take as a business deduction. There has been some fits and starts on legislation that would change that. There's currently a lawsuit going on about that. So I think that incremental things may change in terms of how things are forgiven. I think the way the wind's blowing right now, rather than another business program, there may be another stimulus check coming out that will be giving direct aid to people. There's also talk about what's called a return to work payment, where folks who do go back to work and get off the unemployment that has had that $600 boost will get a bonus based on going back to work. So what I really think in the future we're going to see is things that are a lot more targeted to folks who really need it. The folks who are suffering the most from this, because as everyone said, this was originally an 8-week program, right? The government figured that this was going to be done by May, and we all see how that's turned out. And there are some folks who've been able to recover, some folks who have been able to, transform their businesses to be more digital, like we're doing right here. But then if you do own that miniature golf course, you're out of luck. And that's something that I think will be far more targeted in terms of aid coming from the government. Though I haven't been elected to the Senate yet, so that's still up in the air.
Yes, and hopefully that never happens. But let's clarify one question here. I think you said payroll taxes are not forgivable, but then you said that tax withholdings are forgivable. Can we get clarification on that, Andrew?
Okay, so the portion of payroll taxes that are not forgivable are taxes that, Social Security and FICA taxes that the company has to pay. The matching ones that a company has to pay for employees. Taxes that are forgivable are state and local taxes that the company may have to pay on behalf of the employees. Now, that doesn't mean that when you look at your paycheck and you see that state tax line, that's money that's taken out of an individual's paycheck. That comes under payroll. But if a state has a program where a company has to match that or pay other taxes on behalf of its employees, then that can be a forgivable amount. But that is a state-by-state situation.
Great, thank you. We're coming up on the end of our hour, so I think we're pretty much finished with questions. We're going to put our contact information up on the board here so you can see that. If you have any particular questions or more questions, we'll be happy to answer them. This webinar has also been recorded, so anyone that'd like a copy of the webinar, feel free to reach out to either the Capital Group or Hertzbach, and we'd be happy to give you a copy of that, as well as, again, answer any individual questions you might have that are particular to your current situation. So we're right at the top of the hour. Thank you, panel, very much for your input. It was valuable today, and we will see you on the next webinar.
Thank you for having us.
Thank you. Bye.